We all know that gold and silver, to a certain degree, gold better than silver, but both of these metals outperform cash. Money in the bank just erodes away. And when you see headlines that say gold and silver are now outperforming the S&P 500 and stocks and shares, that does seem quite alluring to get yourself a boatload more gold and silver. But always do so with a pinch of salt, because cherry-picked data can be a very dangerous thing. And whilst it's true that gold and silver are outperforming the S&P 500 right now, and certainly in 2025, there is a strong argument to be made that buying gold right now at all-time highs, compared with buying stocks and shares when they've had a pretty major dip, could end up yielding you a great deal less over a certain period of time, like this next year. So it's very difficult to know what's right, and we're going to dive in and have a good old precious metal ramble about gold and silver being a really great asset class. Hello everybody, Backyard Bullion here, and a very warm welcome to you all joining me for another precious metal ramble where we have down-to-earth discussions about all things precious and shiny. Now, I saw a very interesting video the other day that was talking about how gold has outperformed the S&P 500, that big barometer of financial success, or a barometer at least of economies and how things are going. And yes, it's true. Gold did marginally outperform the stocks and shares index, the S&P 500, in 2024. And of course, in 2025, right now, we are seeing huge gains for gold, and of course, massive slumps in stocks, and gold doing exactly what you would hope for it to do when those kind of situations arise. So, is gold better than stocks and shares? The data can be very easily cherry-picked, and that's, I guess, the big message from here, whilst we arrange that beautiful pile of silver to contrast the gold. Cherry-picking data is something that I feel very strongly about, and unfortunately when you see a lot of stuff on the internet these days, a lot of the time it has a lot of bias, it has a lot of cherry-picking put to it, and yes, the headline there is that gold has outperformed the S&P 500, but when you really drill down into the depths of it, you have to look about what's right for you in the time frame that you're buying. If you buy right now, are you likely to outperform the S&P 500? I would argue perhaps not, because you're already buying at the gold's all-time highs. There's been a massive dip in the stocks and shares market, so you could theoretically be really shooting yourself in the foot. So always analyze in your mind what is right for you in your own financial circumstances and situations. And I'm going to tell you a little bit about how I think about that, how I react to gold as an investment or as a asset. Because realistically, gold for me, and silver to a certain degree, silver has a little bit more volatility to it, so there is a little bit more of a potential investment related swing to it, but that does come with its downsides as well. But I see gold very much as an asset instead of an investment class or an investment vehicle. We'll talk a little bit more about that in this video. I do want to just remind you all to subscribe if you are enjoying our content, because we are motoring along to 75,000 subscribers, where we will be doing a fantastically cool giveaway. And we've got some amazing prizes, not just from myself, but other sponsors of the channel as well. It's going to be a big one. So subscribe for more. So assets, that's what I like most about gold and silver. And I've made this analogy before in the past, but I genuinely do believe that if you buy gold, more so over than silver, and we will touch more on silver in a little bit, but if you buy gold, I like to think that you're essentially buying a little miniature house. Now let me explain, or maybe not a full house, but you know what I mean. You build it, you're buying something real that's a brick, something that's actually there. Now, bricks and mortar are a separate asset class in their own right to the world of gold and silver, and traditionally, if you have a portfolio of investments, you would want to have stocks and shares, bricks and mortar, and then an asset, whether that's gold, oil, orange juice, I don't know, something physical, real. It's your choice as to what that might be. For me, gold is that asset, and it is a proven asset. Let's not forget the thousands of years of history that is behind gold and why it is the best thing to preserve that wealth over time. But I do liken it to having a little property, and that's even more relevant in today's crazy world, which we're going to touch a little bit more on after a quick word from today's sponsor. Today's video is sponsored by Gold Mining Incorporated, whose ticker symbol is GLDG, and that can be found down in the description box below. Now remember, I'm not here to give financial advice. I would encourage you to go and check them out if you're interested and do your own research into their operations. There are links in the description box below. It is clear to me that the world demands gold, and that gold will continue to be one of the most sought after commodities in the next decade and beyond. And with all-time highs comes significantly more upsides from the extraction of gold from the ground. And as of April the 16th, 2025, Gold Mining Incorporated's market cap is approximately $164 million with no debt and $156 million in cash. And compared with their all-time high approximate valuation of 850 million Canadian dollars, that is a significant difference. Gold Mining Incorporated owns a dozen projects throughout the Americas containing an aggregate of nearly 12.5 million ounces of gold in indicated and measured category, and also an additional 9.7 million ounces of gold and of equivalent estimated mineral resources in the inferred category. Gold is trading at all-time highs, whilst Gold Mining Incorporated's share price is near its COVID-19 lows. Now, with all that said, it is very much worth doing your own research, and remind you that I am not here to give financial advice. But if you want something that's a little bit different to owning physical gold, then potentially a mining-related exposure is something that you should look at. So go and check them out. There's a link in the description box below. A huge thank you to Gold Mining Incorporated for sponsoring today's video. And back now to our discussion. So when I look at my gold as being a little miniature house, what I mean by that is you've just got to think about the long term. In that long term period, realistically, three things go up way more than cash. And that is assets, that is bricks and mortar, and that is stocks and shares. Now, stocks and shares are, of course, a lot more volatile. They will go up, they will go down, they will go left, they will go right. And as we've seen in this last couple of weeks and months, that can be a huge swing. So from my perspective, it's nice to have something that is more secure. And you don't get much more secure than having a house. But that's really very unachievable for a lot of people these days. Or if it is achievable, it's realistically the only thing you're ever going to be able to get. You're not going to be able to get into the property market and invest a lot in gold and invest a lot in stocks and shares. You will inevitably have a little bit of exposure to both because you will likely have a pension scheme, hopefully, if you are lucky enough to have an employer that pays a pension, and that will most likely have some exposure to the stocks and shares world. But it is getting harder and harder. And I was in that lucky generation where we were able to get on the property ladder at a relatively young age, and that has propelled us to be where we are today. And I do get a lot of questions on the channel about people asking about whether or not they should invest in gold and silver. And I can't give financial advice, but I can give some practical real world advice, which is try to be debt free. Try to be as debt free as you possibly can, with the only potential exception being a mortgage. Everybody's got to live, everybody's got to have somewhere to live to keep them warm, dry, safe, and it's just inevitable that that has to happen. And if you can't get on the property ladder, then you're going to have to rent, and that's part of life now for a lot of people, unfortunately. Some people prefer that. I've got family members who prefer the rental side of things because it gives them a bit more flexibility. They don't feel tied down to a certain place if their job is lost, or if they have an emergency, then they're in a much better place. If something goes massively wrong with the property, they have a lot more flexibility when it comes to getting things sorted. They don't have to pay thousands and thousands of pounds, tens of thousands of pounds repairing a house. That's the landlord's problem. So there are benefits to renting, but it is a little bit money down the drain. For someone of my generation that has got on the property ladder, you kind of feel like, well, each of those mortgage payments that you make is just, I like to think that you come home and you buy a new brick. Every day you've gone to work, you've bought that brick. That brick in the corner is now yours. The problem is, of course, that if you have the mortgage and you have a long-term mortgage, 30 years mortgage, you'll be paying an awful lot in interest over those years. And unless your salary, unless your investments, unless your other money is keeping up with that, it's going to be hard to really get to grips on how that is. And that interest payment is going to eat into your money. And when a lot of people don't necessarily think about it, but they don't realize if you do a 25, 30-year mortgage and you borrow £500,000 to get on the property ladder or buy your house, you're probably paying back nearly 750, 800,000, maybe more, depending on your rate and the rates that are in that 30-year period. That's a lot. It is a lot. Now, gold, on the other hand, being that tiny little asset that you can buy, doesn't do that. if you don't buy it with debt, it works for you. It keeps that money safe over time. And you've just got to look at where things are with gold. And, again, if we're talking about cherry picking data versus the S&P 500, gold has done amazing things this year. But when you cherry pick it over 10 years, it's 4x'd. Have house prices 4x'd in, well, not 10 years, 12 years. 12 years. Have house prices 4 times in 12 years. They've certainly gone up, but the little house that we first bought, when we bought and got on the property ladder, when was it? 2009, I think it was for us. That was an incredible price. I remember buying this little flat, £50,000. What? I mean, no way can you buy a property for £50,000 these days. I say we had a mortgage, but it is what it is. Crazy, 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 crazy. So gold is, in my opinion, one of the only affordable ways that people can maybe get on the property ladder, the inverted commas property ladder, have something in their pockets. Now, this is not financial advice. I really want to make that abundantly clear. And if you have a mortgage, I would be arguing strongly that paying down your mortgage faster to make sure you don't pay as much interest probably does you better value for money than paying for gold. But it's certainly in a class of its own, gold, and it really is shining quite well at the moment. But be very careful when you are looking at different options out there in the markets and also different time periods, because ultimately what's right for one is not right for another person. And don't get fear-mongered into buying gold right now because you're seeing all these headlines saying it's better than the S&P 500. I would argue strongly, like I said at the beginning of this video, that if you buy the S&P 500 right now compared with gold, that in 6 months or a year's time, you might actually be better off buying the S&P 500. But at the same time, there's a lot more risk there. So it's always worth counterbalancing anything you do with the risk analysis. And that's what I always try to do within my own private personal investments, whether it be a sovereign, a big chunky 2-ounce gold coin, or even a business asset. When I'm making bits of my poured silver, I'm always like, well, if I'm commissioning a mold, like these big spherical pieces, when I commissioned the mold here, the mold was like £500 to commission the molds. Like, is that going to be something that's worthwhile doing? And as it turns out, it was, because these spheres are some of the most popular things that we make. They are stunning and incredible, and we've got a couple of them coming up that I'm going to be showcasing on the channel that we're making. Oh boy, it's going to be a good one. If you want a sphere, get in touch. My email is byb@backyardbullion.com. 30 ounces of silver. Can you believe 30 ounces? 30 of these coins are in that. It's crazy. So cool. Anyway, I start to ramble. Thank you one and all for watching. We'll see you on the next video. Cool Kids Club members, you need something to quote me, and I think the only thing here with the serial number is the... We've done that so many times. This Engelhard bar has been on the channel so many times. Let's do something different. Let's go for the sphere. So if you are a Cool Kids Club member and you want to get involved in our 75,000 super secret squirrel giveaway, that's what I wanted to say, then you need to quote me 30 ounce 2022 sphere down in the comment section. Because when we hit 75K, I will be picking one random video and one random commenter, and you will win a prize. There we go. Thank you all for watching. We'll see you on the next video. And as always, please make sure that you like, share, comment, and subscribe for more.